What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. This is your home show where for 11 plus years, can't believe it, less than, 90 days will be a dozen years, been providing education and options on what is or will be your largest investment and most valuable asset, your home. If you're new to the show, welcome to the Gumbo Nation. We think you'll like hanging out with us. Home away from the show is mortgagegumbo.com. If you got any questions, give us a call, 504-207-7600. Shoot an email to info@mortgagegumbo.com. Got a great show planned for you today. Going to talk a little bit about retail sales. Came out this week, so we're going to discuss that. Also, PMI. It gets a bad rap. And I'm going to break it down for you in detail and explain why you need to be looking at PMI as a tool. And then housing inventory. Housing inventory went negative. And if you listen to the show, we've been talking about this, but it went negative year over year. So we're going to explain what that means. So excited to have our show. Want to make sure for all those dads out there, happy Father's Day. Big Raj, look forward to hanging out with you and seeing you tomorrow. Excited about that. So for all those dads out there and even some of you mothers that, hey, take that place. Good stuff there. I mean, look, I even came in and I put something together. And if I'm sounding a little rough today, I mean, you got to just say straight up, go USA, right? How great was that? A little rough hanging out with, Tiger Priola, McGuire, Mills, all these guys, Rip, yesterday watching this stuff. How can you not be excited about what's going on? And it's just fun. It's fun. So go USA there. And so if I sound a little rough, it's not a day drinker, man. Just not. And tried to be, so bear with me. But, hey, help those dads out. I even pulled up, like, some easy projects that for, those kids listening right now or the moms, maybe simple stuff. Like maybe just replace the air filters in the house. Maybe get his car washed. Although right now with the weather, I don't know if that's refreshing the yard. A lot of these things are outside. And let's face it, the weather's not been conducive. But, maybe clean up his grill area, get his grill ready to go. And maybe put those extension cords up for him. That garage, his workspace. If he's got like a little hobby room or something like that, maybe try to help him out there. So hook him up, man. Maybe make him a little coupon book about some things you'll give to them and help them out and all that kind of fun stuff. You know what I mean? So that's for all the dads out there. I look forward to that, hanging out and seeing my dad. It's always awesome. So, man, what a week, this tropical storm that came through. And I always, hurricane season's here, folks. And if you need your checklists, and for those who procrastinate, look, go to mortgagegumbo.com, click on resources. We've got a hurricane checklist there for you that you could print out or shoot me an email to info@mortgagegumbo.com. I'll send you one. But it's here, and it came in with a vengeance, man. It's, getting woken up to these tornadoes that hit and all the flooding and just the crazy amounts of rain in such a short period, and it's scary, but it's a reminder, right? And hey, it's here early. And I was talking to some people that I work with in other states, and they're like, "Man, you okay down there?" We're like, "Yeah, and you see the pictures of alligators cruising down streets, and we're like, not that it's normal, but it's not surprising, I guess. And it's that time of year, so get that insurance stuff ready. Make sure you look at your policies. Make sure that you have everything in place. And look, I rather and when it comes to these hurricanes, we talk about it every year. We don't want bad things to happen, but I'd rather take on this little storm early this year, this tropical storm that came across, versus when those big boys, as that Gulf heats up a little bit more and those big boys start coming in late August and September, right? So this one kind of popped out of nowhere. Rain still leaving us, lots of rain, lots of, the yards are soggy and all that stuff. But use this as an opportunity. Get your policy looked at. Make sure that you got the proper coverage. Because I know when it comes to, and look, we're going to be talking about PMI, everybody has enough insurance. I don't need it. I don't need more insurance until it's time, right? Then what happens? So get those policies out, check them out, make sure that you look at that stuff, and, or you do like me. Look, I work with the Queen and her team, and I'm like, hey, you know what? Can you just send me a breakdown of the main stuff that I need? Am I in good shape? Right? Get with your insurance person. Or call the Queen and her team. Have them do a policy review for you and see if you're in good shape. Their website. Call them, 985-951-2070. Y'all know who she is. So we got Father's Day. We got the tropical storm this week. There's a lot of different things going on. And the new Fed chair spoke. He had his first Fed meeting, Kevin Warsh, and didn't lower rates. More importantly, in today's environment, didn't raise rates. I think we'll see what happens with this Iran thing, if it's truly moves forward and signed. I don't like the fact that we didn't show up to do the big kiss and hug ceremony, shake hands for the cameras and all that like they were supposed to. That got canceled. Don't like that. But what I liked about this new Fed chair is he's not trying to get his 10 minutes of fame at his meetings. And he talked about a lot of things on how businesses want to know where we at now, not necessarily trying to project forward. They do all these dot plots and all that stuff, and those are all things he's looking to get rid of. And look, it's going to be tough for him. He's walking into a poop show. And not only walking into a poop show, you got the guy who stunk it up for the last 8+ years, decides to stay on as a middle finger to the president. So imagine your boss gets demoted, you take over, and yet your boss is still there every day. So a lot that he's going to have to overcome there. But what is that number? What is that? Again, when we're talking about the Fed and the federal funds rate and him lowering rates, again, it has zero to do with mortgage rates. What's going to affect mortgage rates is if mortgage rates follow inflation, if this thing in the Middle East with Iran does come to a halt. So that's what we're going to be keeping an eye on and going from there, and we'll see. Because you could see what happened with oil prices when they said, hey, we've got a deal, came way down. So that's something we're going to be keeping an eye on for sure, and we want that to work in our favor. But retail sales came out this week, and look, these are the things that you go, okay, if we're feeling the pinch then things shouldn't be, some of these readings shouldn't be as good as what they are, in my opinion. And what I mean by that is, so retail sales were up in May, 0.9%. But what I like to do is let's strip it down. Let's break it down. And this is retail. So think about this is, not necessarily, this is gas, all those, right? You got to put gas. So don't think it's Christmas presents or it's just going to the mall. It's auto sales, all those things. But so it's up 0.9% in May. It was expected to be up 0.3. So that's a hot number. But if we strip out auto sales, it was still up 0.8%. Oil and gas, which we know with the war is way up right now, right? And that's why we're seeing the cost to fill up, and it's starting to come down. But if we take out gas, it was 0.8%. So if we strip out gas and auto sales, retail sales was up 0.5%. Gumbo Nation, these are good numbers. Even without 0.5% over what was supposed to be 0.3%. Now, is everybody rich right now because they got those big tax refund checks? That's what we'll look to see. But when we're going, the Fed needs to cut this and cut that and inflation, and then you've got these kind of numbers, it's tough. Now, is that being put on credit card? Whatever it is, it's the spending is happening. The spending is happening. So we'll see, and we'll keep tracking this as we move forward, and this is where I'll be able to kind of guide you and give you a heads up on why I think what's going to happen and when. I'll give you the whys on this. So let's see, because it was May. So a lot of people getting those, tax return checks and stuff like that over the last month. So we'll see, and we'll keep you abreast on that. All right, still to come on the show. Look, the big topic today is going to be PMI. We're also going to talk about inventory, housing inventory. So if you got any questions, get them into info@mortgagegumbo.com. We hope you're drying out a little bit here in the Gulf South. Check those policies before it's too late. Pull them out. Find them. Contact your insurance agent so you can make sure that you've got everything in place and where it needs to be, and you can put your hands on it. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-207-7600. Welcome back. Listen to Mortgage Gumbo. Dwayne Steiner right here on iHeartRadio. Happy Father's Day to all you dads and mothers out there that play the dad role. Hope you have a great, great Father's Day. You know, if it was Mother's Day, it's a whole weekend. It's a week leading up to, the whole thing there. So, couple things here at Mortgage Gumbo. Listen, want to let you know I am a lender. And because of you, Gumbo Nation, I can never say thank you enough. Not just a lender, in the top 1% in the entire country. And I can't thank you enough every single week. Moms, dad, aunt, uncle, cousins, referring family members, listeners over. You're sitting at the water cooler, referring over. Keep up the work, and I promise to continue to make sure that their needs are my priority. For sure. So still to come, we're going to be breaking down the truth about PMI and getting in the weeds on that and discussing that. Wanted to mention, we talk about retail sales, and I'm all about that and facts. And listen to this, because as I was sitting here, I'm like, man, gift card. I remember talking about gift cards. So I went to my old Google, ChatGPT, whatever it is, right? I use Google, so that gives you my age. Listen to this this number is staggering to me. Every year, consumers leave $23 billion. That's with a B, billion in gift cards, store credit, and vouchers unused. Every year. Yes, year. In a year. In the U.S. That's $244 per person. 43%, 4 out of 10 adults have unused gift cards. How crazy is that number? So look, just go in that junk drawer, that cabinet, dig around. Dad won't know. Re-gift that gift card. Maybe you bought it at Christmas and didn't give it away, but is that nuts? $23 billion goes unused every single year. So as we were talking about retail sales, I start thinking malls and and so I looked that up. That is a staggering, absolutely staggering number. It's a good question here. Tiffany from Ponchatoula. My son is looking to buy a double. Can he use the rent to qualify? Absolutely yes. Big capital YES in parentheses. And a lot of times people think, I need to rent it for 2 years before I could use. No. Here's what's crazy. When you're buying a home, and crazy in a great way, when you're buying a home and let's say it's a double, we could use one side of that rent. We could use 75% of what the rent schedule says it is. So if you live on side, you're going to live on side A and rent side B, and you get $1,000 on side B. We can use 75% or $750 of that. We could give you as income to help you qualify. How amazing is that? Now, what you can't do is, let's say you own a double and then you want to try to use rental income after you've already owned something, and you want to try and use rental income from there, then we've got to see it on your taxes. And a lot of times, guess what happens? You're writing things off, right? So you might get that same $1,000 that you get, And if you claimed it all, that'd be great. We could use 100% of it. The problem is you write it all down. So by the time you write it down with insurance and all that, it's either a loss or $200. And while we're on that, the other thing, and we've been helping people do this for years, especially in the environment we're in, because folks, maybe their needs have changed and they got that 2.5% to 4% mortgage, but they need something bigger. We're able to help them use to qualify the home that they're exiting. We can use that. Same thing at 75%. So your needs, and a lot of you may be sitting in your house because you go, God, I don't want to give up this 2.5%, this 4%. It's a moneymaker. I get it. I said this when this was happening, when I was doing my show back in 2021. I said everybody right now is becoming moguls, real estate moguls, because without even realizing it, you are getting investment properties because people move. So now you could then take that same house that you're in now, keep that low rate, move into a bigger house, and you're able to use the rent that you're going to get on the home that you're exiting. So that's a great question there, Tiffany. There's tons of ways to win. So, yes, absolutely. We do it. And look, that's FHA, conventional. All the loan programs allow it. Now, if you're using VA, and there's one question, but, I'm sitting here doing this, and I don't want people to go, oh, well, no, not all. Well, VA, you even out the rent. In other words, you can't make any money, but we could get rid of it. So as long as it covers it. So we could zero it out, which makes the payment go away. We can't use it as income, which is, winning. So great question there, Tiffany from Ponchatoula. So, yeah, look, we've been helping folks win this way for years. So, hey, maybe some of you are sitting there going, our needs have changed. Our life happens. I need bigger, but I feel stuck, right? Well, now maybe there's some options with that. So great question there, Tiffany. Hey, have your boy give me a call, and love to chat with him and see what we could do for him. All right, let's get into our weekly segment we like to call Rate Watch. All right, Rate Watch is brought to you by TWFG, the queen of insurance, 985-951-2070. Or go to mortgagegumbo.com. Just click on resources, click on their logo there, and reach out. They're amazing. They're the best. What they're doing for clients right now, they are getting you your money back. Are you getting refunds from your current insurance provider? Are they shopping you? Are they always looking at what options are there? Finally, in Louisiana, insurance rates have started to come down. The Queen was on a show a couple weeks ago talking about this. I've seen it, not just on my house, on my business. Lots of money coming back my way, and I'll take it. I don't care if it's 1 red cent. If I'm still protected the right way, then we want to make sure we're doing that. And the other thing I could tell you is this. You have to, just like lenders out there right now, a lot of them spewing. Had somebody tell me, I'm getting 5.25%. I said, roll with it. I said, send me over what you got. They were charging them 4 points. So this person was being charged over $20,000 to get an adjustable rate for a year. It's the same thing with insurance. You've got to make sure that you're getting the proper coverages. All right, 30-year. Conventional last week was at 6.59. This week, 6.58. Let's see what happens with this war Let's see. It's a weekend, so you never know. 15-year. Last week, 614. This week, 615. FHA, 615. Look, absolutely everything's flat across the board. Jumbo was 684, 681. VA, 616, 61 to 6.17. And the 10-year, 4.456. So the margins are tight. We talked about that last week when we were talking about discount points, right? And why you're not getting as much right now. So those margins are tight. All right, don't go anywhere. On the other side of the break, we're going to talk about housing inventory and why the housing inventory turning negative is not a negative headline. And then still to come, PMI. Why you need to be looking at it as a tool and what it is. Don't go anywhere. If you do, we'll find you. My name's Dwayne Stein with MortgageGumbo.com, and I'm a lender, and I want to help you get that dream home, refinance, construction, reverse mortgages. Don't go anywhere. Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-207-7600.
on and wind me up. I'll be a freakazoid. Come on and wind me up.
I mean, I hear this song, Gumbo Nation. Might be too much TMI, but it brings me back to college and spring break. And remember the boom boxes you kind of had on your shoulder? I mean, this was what walking out on the beach, playing, drinking Gatorade with vodka in it, you know, because you got to hydrate while you're out in that sun all day. But anyway, actually makes me get a headache. So, all right, let's talk about housing inventory, and then we're going to get into PMI. And I'm going to help you just understand why PMI is not a bad thing. Housing inventory, and if you listen to the show, you know this, but inventory just went negative year over year. Now, it's still at multi-year highs, and a lot of this is relistings, right? We've talked about that several times, but my point is folks are buying. And, of course, real estate's local, so, but things are moving. And I think once this war stuff gets behind us, you're going to see it continue to move. And it's going to get better. But what we want to understand is when we're saying that inventories get negative, that means people are buying. So there's less houses on the market. So you have folks that, what does that mean? That means people are out there competing. We're seeing it. Multi-offers. Seeing it a lot. And what happens is now that Memorial Day's behind, you'll see a lot of less things will hit the market because people either go, hey, look, we're accepting that we're not going to move, or we're just going to stay in the school district we're at, or not willing to cut their price. But when you see that headline, you immediately want to go, oh, this isn't good. Well, what it means is folks are out buying homes. And that makes me, I want to piggyback because I get these calls a lot too. And for those of you who watch, this is proof as well on, for those who watch DIY and HGTV and think you could fix and flip and make all this money in 30 minutes, the truth is on profits for fix and flips, and I had a long conversation with somebody last week on this, it's at 2008 levels. And the reason why is we get back to when we're talking about the inventory, things are sitting at record prices. You don't have a bunch of bank-owned properties. The banks aren't trying to get people out of there. They understand that there's equity to the tune of trillions of dollars in everybody's home. So homes are doing what they want, but those profits are down. And that's what we're seeing. So fix and flips, like I said, it's way down. And why? Well, a fix and flipper wants to fix it and flip it, not hold on to it because of rates, right? So it's eating into profit. Materials, costs, stuff like that eats into it. Those inspections, let's face it, all fix and flippers on DIY and HGTV, and they, try to put a little lipstick on a pig, and they're kind of getting popped there. And we talked about it also. Days on market. Things are starting to come down a little bit. But we saw this week Something sitting on the market for 40 days doesn't mean you go in with an offer that's $40,000 below what they're asking. Because some of these homes would happen. These are relistings, right? We talked about this. And they put it back on the market. So a lot of these homes, when we talk about these, they want to sell, don't have to sell. Because it goes back to what we were talking about in our last segment. They're sitting on a 4% rate. They'll call me and go, hey, how much can I get for rent on this thing? And their rent will cover their note. Especially if they don't need the money to sell the house to move somewhere else. If they've got funds for that next move. So when we're looking at housing inventory, be aware when you're looking at the days on the market. And understand that when you're going into these, expect to go in, especially when these houses are priced right, they are moving. I was on the phone with a gentleman yesterday who's looking to buy. Look, the house went on the market the day before. They had to take an appointment time, and they were lined up like going through a drive-through. He said, this is crazy. I was on the phone with him and his realtor. And they were taking appointments for those folks to walk through. So even though we hear about these rates, and you know it, and I see it, and I share it with you every week, folks are pent up. They're tired of renting. Renting's not getting any cheaper. And when that new house comes on the market and you've been staring at some of those same houses that are sitting there, folks get excited. Realtor I worked with last week put the house on the market. Offer made. We haven't heard of this in forever. Unseen. Made an offer. Moving from California. Made an offer. Virtual toured it. I mean, dude, we haven't seen that since 2020 and 2021. So I want you to understand, home buyers, what you have here. And how a lot of these projections, now you're starting to see these home appreciation numbers are starting to go up. And especially right now, because we shared last week, new home sales, especially right now in these existing home sales. Because there's just not enough on the market. You got to keep in mind, years ago, I mean, you'd put 250,000 new houses on the market every week. So when you hear those people, is it going to be a bubble? We're at 70-something thousand listings a week compared to when it was 250 to 400,000. Just to put that in perspective, every week it was 3 times more. So just understand what you're dealing with when you get out there. Get with me. Let's have a conversation so we can help you win. Know what's going on. I had a parent call and thank me this week. Listens to the show. Sent their daughter over. Looking to buy a duplex. Working with a phenomenal realtor on this deal. Who, let's talk about this. How do we win? Because it's limited on cash that they could come in. Bank of mom and dad's not an option. And that's why the mom and dad swallowed their pride and said, hey, I need your help. What can we do here? Can my daughter buy? And we took that clay, we molded it, we got the numbers in order, and now we're trying to work through a contract right now with the seller. And as a lender, that's what I do for you. And these are the conversations. These are the why. And this is why the 5-star reviews roll out every time. Because I look out for you. It's not about me. And it's understanding and explaining the whys. Especially in this market, we want you to win, and we want you to get close to purchasing a home so you could start taking advantage of those benefits. All right, don't go anywhere. PMI. I'm gonna change your whole thought process on it and help you understand why you need to be looking at it as a tool moving forward. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. The home away from the show is MortgageGumbo.com. Happy Father's Day, Big Raj, and all those dads out there. It's your weekend. Enjoy it. All right, final segment here. Main topic. Of course, home away from the show, MortgageGumbo.com, all that fun stuff. I want to sort of flip the script on mortgage insurance and do my best to help you understand why waiting and trying to get 20% down, in essence, could cost you more. And so many of you look at PMI as a penalty. And it should be looked at as PMI should never be looked at as a penalty. It should be looked at as a tool, sort of an accelerator that helps you buy a home years ahead of schedule. And the fact is, 75 to 80% of first-time home buyers put less than 20% down. And look, I see a lot of bank of mom and dad, and that's awesome. But for some of you, when that's not an option, let's have that conversation. And for maybe neophytes, some new folks listening, what is PMI? What is it? And it's basically an insurance that protects the lender. But what that does is it allows us to expand access, expand financing options to you or your family. And the whole goal is it allows you to become a home buyer much, much sooner because you can have a smaller down payment. Even right now, for folks, I'm showing folks who have 20% how they can benefit by not putting more down and holding on to those funds for when we refinance. And as we're doing refinancing right now, those folks are coming and we're refinancing and they're bringing that capital back on those funds that they had from a couple years back. And we're getting rid of the private mortgage insurance. But so many of you out there, like I said, 80% use it as a tool. And we want to, and the reason why we bring it up and want you to understand is let's get you in that home, building equity, getting appreciation, building wealth. And so many times what you building annually in appreciation way outweighs the cost of mortgage insurance. If it didn't, we wouldn't be talking about it. It wouldn't make sense to talk about this. And the cost of PMI, Gumbo Nation, is usually, it's so much less than what you typically believe it is. And it all goes by programs, credit score. But how many of you right now are thinking, I got to save 20% to buy a $250,000 house? So you're trying to get to 50 grand. And what keeps happening? That home price keeps going up. So it's the dog chasing its tail. We sit there and watch them and laugh at them. You're doing the same thing. You're chasing your tail. Where so many of you right now have that 3.5% to 5% down. And we get the seller to pay some of those concessions for you. So you're able to hold on to your money. You're able to keep that money in your account. You're able to have that cushion that we all desire, those reserves, that emergency fund, versus trying to get to 20% and then you clear out everything and you're literally make yourself house poor, which is what at mortgagegumbo.com we want to avoid.
3 minutes.
We don't want you house poor. Yay, I own a home, and now I have to decide if I want beef or chicken ramen noodles every night. Let's help you keep your finances in check. And every loan allows this. Conventional loans, listen, once you get to 20% or 78%, it falls off. Now, FHA, it stays on for the loan. Unless you put down 10%, then the mortgage insurance comes off after 11 years. But VA doesn't have a mortgage insurance.
2 minutes.
RD does. It's 0.35. FHA, it's 0.55, sometimes 0.50. VA doesn't. Conventional, it could be anywhere from 0.30 to 1.5. So it's so cheap, Gumbo Nation, that I want you to understand. Many of you listening right now, moms, dads, aunts, uncles, this is why you listen. And look, I get it. Some of you are like, oh, no, we don't want that. Listen, it's a different time for many of you than when you were buying back in 70s, 80s. Think about back then when you were buying and the rates were 17%. If you'd have went, oh, this is way too high. And now you're sitting on free and clear homes. You've got tons of equity. You're wealthy because your home has worked for you over the last 20, 30, 40 years.
1 minute.
We want to use PMI, Gumbo Nation. I want your mindset to be, how can I make this a tool, not a penalty? We want to accelerate your wealth. Let's use it as a tool. Go out this week, Gumbo Nation. Go out and spread the word. Just tell one person. Hit them with a dad cam. Was at the bar yesterday and got hit with it several times. I love it. Thank you.
30 seconds.
It's appreciated. Go follow us on all of social media. Rolled out this week. G-Unit, a cup of gumbo. That'll be a nice little weekly segment we got going forward. Happy Father's Day to all you dads. And until next week, Gumbo Nation, keep stirring the pot.